Good day, everyone. This is Patrick from EasyFX Code Trading System, and this Saturday, the 29th of January, 2022, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the first week of February. And as you can see across all these three majors, the US dollar has risen and caused these pairs to drop and fall. Let's begin with the Euro, where it fell below the trend line, the rising trend line, where it was in an ascending triangle. Before the previous week, it broke out higher, but then dipped down back into the triangle. And on Wednesday, after the FOMC Federal Reserve announcements, and US dollar was boosted by the hawkish Fed, and these caused the Euro to fall on the Wednesday and Thursday sharply down to the 200 pip extension of this continuation move here. And that has also fallen below the support that we identified last week at 112.00 near these swing lows. So let's mark another round figure level here at 110. Next fib extension lower, we at the 262 fib. That's almost right at the 109.0 level. But the 110 will have to provide support first if it does break down lower. And this coming week, there's the ECB's turn to announce their rate and policy decisions. There's likely to be no change. And with a hawkish Fed, the US dollar is definitely rising against the Euro. The Federal Reserve did confirm the conclusion of the QE by end of March. And then openly mentioned that they would take rate hikes as a serious consideration to temper the rising inflation in the US. And this caused the US dollar to rally against the major pairs. And let's see on the weekly time frame how this looks like. And we could also take a short-term fib reversal move here. Let's take a look. If we take this reversal move and look at that, the 162 fib extension lines up with the 110.00 round figure. That's at the 110.03 level. So yeah, it's looks likely that if there's a bearish continuation move, then it could dip down to the 110 level. So unless the ECB can stem the tide and provide some impetus for the Euro to rise, it's likely that it's going to fall even further to a critical level here. So let's Let's move this support level now. This is now going to be resistance. Let's move this down here to the 110 as support. And this resistance up here, let's move it down to this level here as resistance, and we'll see if price climbs back up to retest this, and if it's able to break back higher. Oops, let me adjust this. That's the 112 round figure. Okay. Let's also take a look at the US dollar index to see how that has or the reaction after the Federal Reserve Wednesday. And that was the trigger that pushed it above the 162 pip extension of this swing move up, and it blasted through this intermediate resistance comfortably on the Thursday and reached the 200 pip extension level here. So this is going to be support level. Let's extend this one out. This is at 85, 18. Let's mark it accurately here. 867. Now we'll see whether the US dollar is done with its move or could extend even higher. So this 200 pip extension is at the 97.15 area. So the next swing high area is around here. So it'd be too soon to move up to 262 pip. So let's draw this swing high area here. There's a spike through here. Let's check the level here at 97.78. Okay. Let's also take a look at the reversal move. This move here. And okay, so that aligns with the 138 pip extension. So that could be a possible target. The next extension, 162, is at 98.30 area. Okay. Let's go back to the daily time frame. So let's mark a resistance zone up here. This is going to be a key one here. All right, so let's see next week whether there's going to be further bullish continuation move and momentum. Let's move back to the euro. So for now, in the short term, it's definitely bearish for the euro, and we'll see if ECB announcements will have any impact to stem its fall. And for now, looks like US dollar, if it continues higher, then the euro is being penalized here. And on top of that, Friday, there's also the US non-farm payroll report. So that will signal if the US dollar is going to continue higher or whether it's going to take a pause. Let's move on to the cable, where this week all three central banks are making their announcements, having their meetings. The ECB, the Bank of England, and also the RBA just after the FOMC last week. So Bank of England is also on Thursday announcing just before the ECB. And it has also taken tumble. It tried to hang on to support at the 55th retracement around the daily 55 EMA. But then on Wednesday and Thursday, it did continue lower and pause on the Friday. Tried to climb back up to the 38th retracement. So it's right near at this level here as well. Can remove this one now. To the next support, let's before we do that, let's draw a round figure down here at the 133. It's right at the 21th retracement. So that's likely a support zone at the 133. And this is now going to be resistance at the 55th retracement. That's near the 135. So let's move this round figure here down to the 135, where it's sitting with the 55th and the daily 55 EMA. So that's a critical, that was a critical support, but has been broken. So now that's going to be the resistance area. So that's the range that we're looking at for next week between the 133 and the 135, and we'll see if it's can retest this level. And the BOE is expected to announce another rate hike. It already did that the previous meeting. So this will be a second consecutive rate hike from 0.25 to 0.5%. So we'll see if there's going to be a fundamental reason to break through the resistance and back up to the 62 pip extension where the daily 200 EMA is. So if the central bank is disappointing investors, then it could dip lower, test the 133, but that should be a key support zone. All right, so this is a critical week for the cable with resistance at 135, and if there's any hawkish news from the Bank of England, then it could try to drive through the resistance and retest the daily 200 EMA and the 62 pip extension. All right, and also it's also exposed to Friday's US non-farm payroll report. Let's also look at the weekly time frame, and you can see that it's just holding on to the weekly 200 EMA, but it's looking bearish still, and that's a critical support level for it to hold on. Okay, let's move on to the Aussie dollar. And like I said, it's also the RBA's turn this week on Tuesday to announce their rate decision. And on Friday, they have a separate statement for the monetary policy, but they are not expected to make any changes. No rate hikes at the moment, even though the economy is opening up and it's growing. And it did drop down to test the key support low, swing low here from the end of last year. And that dipped below the 70.00 area and tried to dip lower. So it is showing a lot of weakness. And below that, we've got to move to the weekly time frame. There is, so this was the retest of this swing low from September towards the end of 2020, and it was tested end of last year, December. If it dips lower, then there is this swing low area here that it needs to find support from. And beyond that, there's another level of support down here. Okay, so let's draw that in before we change the fib direction. So let's draw this first one first at this area. And that's in the region of the 68.30 to 50 area. And if we draw a swing low, that's at 0.6677. That was going to be a very low level. So you can see this was support, and it was resistance for a while, tested here before it was broken through. Okay, now let's change the fib direction here. See whether it aligns with any of these key levels, and there is a 162 fib just below this swing low area at 66.45. 138 fib extension is at 0.6778. That's likely at this low here, 67.76. So we can draw one additional support level here. $7.65. Okay, let's move back to the daily time frame. All right. So critical week for the Aussie dollar. Let's move this over here now, and this is going to be resistance. Let's move this down to support zone. And let's also draw in another round figure. At 69. And eventually 68. Okay. Now we can also, let's draw a reversal, move this to a reversal fib area, and yes, that's 162 fib extension alignment with the 6800 area. So this is possible as well. And the 200 fib extension, that aligns with the swing low, key swing low area. So this might be a better fit for the fib. Let's go back to the weekly time frame. So 138 will be a critical area to find some support. Otherwise, it will dip down to test the 162 fib. just around the 0.6800 area. Okay. So let's draw this it down to the wick here and to the body of the yeah. So it looks like this whole zone is a critical level of support, right? Around the 162 fib and the 0.6800. So that's going to be the key support zone. And there's one support zone here at the 138 fib. And then the critical one here, next one down below in this region. Okay. All right, so let's see if they're able to stave off any further fall or decline. But if it does, then those are our first and second support levels. And it's going to have a tough recovery if it does try to climb back up. Okay, so do check out my other videos on spot gold and dollar yen as well. We can see spot gold having a major fall due to the US dollar strength. Have a safe week and a good trading week, and cheers for now.